So we have the stocks, and also we have bonds like treasury bills of, central banks like that. We have bonds and the likes like that. We also have our commodities talking about sugar, talking about cocoa and the likes like that we sell from. There are countries that sells cocoa. For Nigeria, for example, now Nigeria, talking about our crude oil is part of our commodity. Talking about our, cocoa is part of the commodity. There are also countries that also sell sugar, like wheat. You look at countries like Ukraine, they also base majorly on wheat and the likes like that. Those are the commodities. And now the next one is cryptocurrencies. Most of us know that, when we keep shouting, you buy the dip, BTC, Bitcoin, Ethereum, and the likes like that, all manner of coin. Maybe someone here is even trying to bring up another coin now, and we are going to call it, what are we going to call that coin? Maybe we should call it that shareman's name. It's coin. Sir? Boss coin. Oh, so when we start buying boss coin now, we are going to pray that it doesn't enter the deep. So it should just be going to the moon. So that's what cryptocurrency does majorly. And we also have synthetics too. Synthetics, we trade synthetics, and we have training for that here on the floor for synthetics, where we trade V75, V100. It's part of our courses that we have across board. But majorly for this training, we are focusing on Forex, which is foreign exchange. Now, what does the Forex really based on? It's simply me, I'm buying and selling currencies. Buying and selling of currencies. Simple. I buy and I sell currencies. For example, now, you have had, okay, a naira to a dollar. Current exchange rates now, we have 755 to 750. So meaning if I have $1, I'm going to pay 755 naira to buy $1. So if you do that, probably you carry your 755 naira to the aboki in the market or by the roadside. They give you $1, you give them 755. You've actually you've done what everybody knows to be Forex. That's just as simple as it is. Now, what we are now trying to do now is bringing that system on your computer. And in between that, now you are now connected to the global market where you can easily buy a currency and sell another currency. Are we together now? So when you begin to do that on your system, then you have now come into trading proper. Because what you are simply doing is you are buying a currency and at the same time selling it. You get the point now? And that makes it possible. It's not that every one of us, we don't have enough liquidity. What do I mean by liquidity? Enough capital to do that huge sum of transaction. And that is why we have our brokers to help us with that. And the broker we are using here is Equity Broker. So we'll be using Equity Broker all throughout this training. I believe every one of us, we've downloaded the trading platform of Equity Broker. And if some of us have not done that, in the course of the training, you definitely have to do that. Get it now. So Equity Broker will help you. Instead of you don't know any white man that wants to sell euro now. For example, you want to buy and sell euro USD. You don't know anybody who wants to sell euro USD now. You get it now. You don't know anyone who wants to sell euro. Neither do you know anybody who wants to buy USD. You get the point now. But when you come to Equity Broker on the platform, yours is just to show your interest. Okay, I want to transact on euro USD, and Equity platform have everything needed for you to do that. All they just do is take your trade. When it goes your way, make your profit. And what we do majorly in Forex is what we call CFD, contract for difference. Meaning that when I buy at this particular point, let's say I buy 1 euro USD at the rate of 1.3215, and it goes up to 1.3515. So the difference between the price I bought it and the price I want to sell it is my profit. For example, now I bought this phone maybe from PZ at the rate of 50,000 naira. Now, I came here to the class, I sweet talk everybody, oh, this is the new phone in town now. You can use it to, capture someone from flyover right from this place. You're going to see it clearly. It's much more better than iPhone 5, everything, And I'm going to tell you, oh, how much is it? I'm selling it for 75,000 naira. How much do I buy it? 50,000. Now I'm selling it for 75. The difference between that price I bought it and the price I'm selling it now, it is my profit. And that's exactly how this industry works. So it's not a guesswork, it's not gambling. You definitely know what you are doing and you know where you are heading to. You get a point now. So that's what we'll be taking you through today. So what is Forex trading? So Forex trading refers to buying and selling of currencies on the foreign exchange market. It is buying and selling of currencies on the foreign exchange market. It is the largest financial market globally with an average daily turnover of trillions of dollars. Meaning that the largest financial market globally, any and everywhere globally, is the largest financial market. What does that mean? Simply that currently, you don't have a market that has a turnover of this particular amount on a daily basis. That is trillions of dollars, not trillions of naira. Trillions of dollars. Punch your calculator. Maybe you should just choose $5 trillion. Punch your calculator with the exchange rate. All you just be seeing is E, meaning error. Your calculator can comprehend that. But it is the largest financial market globally, meaning that with the help of our broker, you get everything you need to know and how you are going to do it well and here. So the Forex market operates 24 hours a day, 5 days a week, and it allows individual and institution to profit from fluctuation in currency exchange rate. What I just explained earlier, that the market is open 24 hours a day and 5 days a week, meaning from Sunday evening till Friday night. Get now, Sunday night till Friday night. What do I mean by Sunday night? From 11:50, the middle of the night, you begin to see the opening of the market, begin to see your charts, reading that way. So that's how it moves that way. So from Monday to Friday, the market is open, you can trade, but Saturday and Sunday is the break in the market. You get it now. So the market is closed during weekend and it resumes again on Monday and we keep moving. So who are the key participants in this market? That is, I'm not transacting with dead men, neither am I transacting with spirits. Who am I now transacting with in this market? So in this market, the Forex market involves various participants, including banks. There are banks that trade Forex, including the bank in your mind now. Yes, those banks you are seeing along the way, those GT, all those banks, they also trade Forex. That's it. So corporations, retail traders, central banks, they also trade very well. And if you look at it very well now, from the banks, let's start from the banks. The banks, they trade Forex. How do I mean? When you go to the bank and you want to make any exchange, you go with your naira, probably you are traveling out of Nigeria and you need dollar or you need pounds to go to the UK, or you need dollar to go to US. Now, what you just do is carry your equivalent naira, go to the bank, and they are going to make the exchange for you. Just that it is what it is. We are in Nigeria, and sometimes you may not get it at your own rate in the bank. So most people use the aboki by the roadside. So we also have corporations that does that. The corporations that does that, like the regulatory body in Nigeria now, is what we call BDC, Bureau de Change. Maybe some of us have had that before. So we have corporations that does that very well, and also companies too that import their, raw material from abroad. They get it done that way too. So they are also participants of the market. They are also part of those who trade the market. Also retail traders. Retail traders, that is the category you and I we are. We are the retail traders. How? Because if you want to buy £1 or let's say a large quantity of it now, you don't have enough capital to do that, but with the help of your broker, you'll be able to do that. Your broker gives you what we call leverage, meaning that if I want to buy Euro USD, let's say one lot of Euro USD, I'm still going to explain those terminologies, but I'm having just $100 in my account. How will I use $100 and I'm going to use one lot to trade, let's say $1,000 or $100 of Euro USD? Doesn't correlate. But with leverage, you can actually do it. What does that mean? Meaning that Equity Global, they are going to give you the leverage, like make you have like times 10 or times 100 of that capital, but you are still seeing your capital there, which is $100 that you have in your wallet, but you are having times 10 or even times 100 of it to make the trade you want to happen. You get it now? So that's what leverage simply does. So that category of people, you and I, will fall to that retail trader. We are all retail trader. We are the one who, just cap out, just let me get my daily bread. Give us this day our daily bread. That's what we do in the market. But whatever we get, okay, today I'm not doing much. I got my $50. It's been real. I'm out of this market. But you see banks, they are going to put millions of dollars, you get it now, just to trade on a daily basis because they have the liquidity, they have the capital enough to do that. So that's the category we all belongs to. And we also have central banks. Our honorable, great Central Bank of Nigeria, led by our amiable Governor Godwin. You get it now. I won't say more than that. Or the Federal Republic of Nigeria, Central Bank of Nigeria, rather. So he also have that too. Through that, central banks they also transact Forex. They do that very, very well. You're welcome. Central banks, they transact Forex very, very well. So they are the one you use also as, citizen to also leverage most times. You get it now. So you get that well. And we also say that corporations engage in Forex trading to hedge against currency risk related to international business cooperation. What does that mean? Simply, for example, now, Dangote, if they import wheat for them to produce all this spaghetti and the likes like that, you know that mostly everything we consume in Nigeria, we don't have the raw material here. So most of it are being imported. Get it now. So for these people to do that, they need to go into Forex, foreign exchange. They need to convert their naira to dollar or to euro or to whatsoever currency they need to get it from there. They do it there, and when they purchase it, they bring it here and use it for production. The same way we have companies like Toyota. Toyota is not a Nigeria brand. So when they do their production over there, they bring it here, they sell it. When they are done at the end of the year, they convert their, currency, which the profit and everything they make in naira, they convert it to, be it dollar, be it pounds, or whatever they want to convert it to, they convert it there and they go out again. So that is exactly how it is. Forex market is not just what someone just do with algorithm, and at the end of the day is being, you take, I take from you, you take, I take from you. No, you know how your money is being, how it goes and how it comes. Meaning, if I'm saying I'm buying Euro USD now, there is someone somewhere on earth in this world who is also ready to sell the same thing to me. You get the point now? So that's how the market works. That's how we move here. So retail traders, like individual investor, participate through online brokers. That's what I'm trying to say, that we retail traders will participate in this global market through our online brokers, which is Equity Global. We use Equity Global as our broker here. So they are the one we are still going to, encourage you. So when you do that, when you, open account with Equity Global, then we give you all you still need to move forward in the industry and also help you to gain more edge in the industry. So a central bank influences exchange rate and implements monetary policy to stabilize their respective economies. Now, in Forex, we have central bank policy that comes into the market. You hear things like bank rates, things like, FOMC, monetary policy, and the likes like that, NFP, news like that. So these are bank policies that regulate their money, that regulate their currencies. You get it now? So whenever those news are coming, it's been advisable for traders, especially we retail traders. It's highly advisable, just stay out of the market and just hold on and see the reaction of the news. There are times maybe you will have been in massive profit. You're already looking at your profit, maybe you just took a trade and you're already having, like $5,000 as profit. In your head, you're already, pricing, okay, I'm going to buy Toyota Corolla with this one. When I finish buying that, I'm going to buy land in Lekki. When I finish doing that, I'm buying a skyscraper, maybe an office in Dubai, Burj Khalifa. And as you are planning all that in your head, you see that profit, still going up. And inside of you, you are hearing close, close, close. You're still like, there's still room. You're going to get it. And all of a sudden, a bank news came out, maybe a bank interest rate came out all of a sudden. And those profits you are seeing there ended up being a loss, meaning the market goes against you instantly. So those are the major news that, make the market very, very volatile at those times they are coming. That's why it is advisable for retail traders. Whenever you are trading and you discover, we are going to show you here too, where to know a news is actually coming, the sites you need to watch out for, how you know the level your profit may get to, or the level you are targeting for profit to get out of the market before the news. But it's not advisable for, retail traders, especially beginners, to start trading news. If you start your career with news trading, you're on your way to your village. It's no more than that. That's just it. That's the simple truth there. You start your trading career with news trading, it's been real. Just wave you goodbye from the industry. So that's how that works. So now, what are the major currencies? You see that the Forex market consists of numerous currency pair, but some major pairs dominate the trading volume, meaning that there are major pairs that dominate the trading volume. There are major pairs that dominate the trading volume in Forex market, which are Euro USD. You see pairs like Euro USD, like GBP USD, like USD JPY, like gold. So you begin to see all those pairs like that. So they are the one that dominate the market that way. So when you begin to trade, don't start your trading career by trading pairs like USD CNY or USD, I won't say the rest, but make sure you start with the one that is very common that everybody trades, Euro USD, GBP USD. Now, what are the basic terminologies in Forex? We have things like pips. You hear terms like pips. How many pips are you targeting? How many pip is your stop loss? How many pip is this? Meaning that pip is simply the smallest unit of measurement in Forex, representing the price change in a currency pair. Meaning when you enter, probably you buy Euro USD at 1.245 now, and it moves to 1.257. So from 245 to 257, 45 to 57. The difference between that is the pip. You get it now. Those little figures there is the pip. So you may have a profit of, let's say, 50 pips, 100 pips, and the likes like that. So that's how we calculate that. But in the course of the training, we are still going to teach you how you calculate that very well. We also have lots. What does lots mean? Lots mean that the simple amount you want to buy, so or buy or sell, the standardized trading size. You get it now. Size you want to buy or sell. You hear things like 0.1 lot, 0.10, 0. This, or 1 standard lot. You get it now. Or 20 standard lot. It depends on your account size. That's what determines your lot size. Also, you hear things like trend. What trend is the market now? Is an uptrend? Is a downtrend? It's just a sideways trend. What does that mean? Meaning when we have uptrend, meaning that the market is going up, the price is increasing. So in an uptrend, you buy. When you begin to hear, oh, it's going down, we are in a downtrend, meaning the market is selling. In a downtrend, you sell. When you hear things like, oh, the market is just ranging, meaning it's not going anywhere, it's just dancing in between. When it comes to the range market that way, you stay out of the market. So you also hear things like time frame. What does that mean? It simply means the current relationship between price and time. My colleague is still going to show you that, meaning this market has a direction. It has the way it moves, like we have our S and Y axis. So when you have your S axis where time is, and you have your Y axis where price is, so it moves in that direction. So that is time frame. So on time frame, we have maybe 1 minute time frame, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, and even monthly time frame. You get it that way. Also, you hear things like stop loss. Do you set your stop loss on your trade? What does that mean? Your stop loss simply means that when price come against me to this level, let it take me out. I'm ready to take this loss and out of the market. Also, you hear things like take profit. What does that mean? It simply means that when price goes to this level and it gets to this particular level, whatsoever is the profit, just let me pack it and go. You get the point now. So in every trade, you have to set your stop loss and your take profit. So those are the basic terminologies we are going to look at. Thank you very much. That's just a basic introduction to the Forex. And now my colleague will be coming to take us the major thing we would be using, giving us the structure and the indicators. Thank you very much. Cheers. God bless.